To identify the right entry on a chart where to enter, as a price action trader, I need to analyze the overall market context. I want to find the correct key entry point, and I want this setup to be a high probability setup. We're looking at S&P 500 and mini futures. The time frame is 2000 tick chart. We're going to be using this chart to learn how price action works and what today had to offer. The very first thing I need to do is I need to identify the overall market structure. And it is quite easy. I can see this is a trend range because we have big move down, big move up. Naturally, I need to identify the low day support, the key level, and high day resistance, because in trend ranges, there's a big chance the prices will bounce upon reaching one of these key levels. You expect price action to pivot upon reaching these key levels. Now, I'm also following trend line rule, and right now you have to make a decision as a trader, because I can see short-term channel has a break new high. I can see continuous bullish momentum. So your inclination may be, hold on, am I supposed to draw a wider uptrend like this? And not really. Because this was trend range from the open, without that much of a volatility, we know that in trend ranges we want to follow mainly tight channels. So I'm going to wait after market opens, and right now I'm playing the short-term channels, and we can see that the price action continues working lower. So this is good. This is confirming the sellers are coming into the market at the range highs. And right now I'm going to try to find the right key entry point. I'm going to draw a channel like this. I was even looking for potentially a channel like this from the very first swing, but we kept getting small overshoots, so I selected for the time being this tighter one. Important thing is to have some channel, because this will always keep us on the right track. And I have a new low, first entry short, pull back, second entry short. Why am I counting for second entry short? Well, because right now the trend is down, the target is most likely a low today key level support, and a second entry short is a good opportunity for me to sell if it forms under the right conditions. We can see we are still far away from the EMA, so I cannot really take it, unfortunately. It worked, but I cannot break the rules. I have to follow the rules. We're closing outside the channel. So price action trader is expecting this downtrend to get new extreme according to trend line rule. But I need to time the entry properly, so I'm going to redraw a short-term uptrend. I have an uptrend working here. This is a first entry short. And notice what formed shortly after. Both attempted to create new high, but this is technically still first entry short, because there is no break above neither one of these bars highs. So had there been break above this bull bar on this bar, this would have been a great second entry short. You expect new low at the EMA, great high probability setup. But because this is still part of the first entry short technically, and you can treat it more as a hidden second entry short, I have to mark it more aggressive. But this is where the correction phase will end. You expect new low and the bias is bearish, hidden second entry short. Now downtrend created new extreme, but I can see EMA rejecting strongly and we keep pushing lower. And this is important because notice I drew my channel from the two swings, but there is one swing earlier and I can use it to draw a wider channel. So if I'm going to try to project the channel, I can see, okay, it's getting nicely confirmed here, and notice how nice it fits at the top. You're using market geometry to help you find the correct channel. So this is what I decided to adapt today. Now we have lower high. Can we take this setup? We cannot. Because right now we are forming small consolidation, area of indecision. You can see we have 20 bars stacked right next to each other. So much overlap. You're selling directly into the low of this consolidation. You want to sell high when the correction phase is ending. Not low, inside overlap area, directly into the bottom of this consolidation. So I cannot sell here. It's way too far down. Price action is breaking the channel. I'm going to redraw a short-term uptrend. We have a break, new extreme. What is the bias? This downtrend still needs to get new extreme. Okay, so the bias still remains bearish. And right now you can see that we have a large two-legged pullback. This is how price action likes to move. And the uptrend played out with the break new extreme. So this tells us, okay, the bulls are over. And this right here is new low, first entry short, pullback, second entry short. And you can treat it also as a failed breakout out of this consolidation. You broke higher and most breakouts will fail, especially since the bias is bearish. But once again, notice how it formed. No break above the bull bar. There is a big tail at the bottom. It's above EMA, but it's okay. Failed breakout will form above EMA. It can happen. But once again, the bars form a little bit bad. So more aggressive trader can take it, but it is not super easy setup, high probability one. But context makes sense. You need to get new low. You're expecting lower high that never formed, and market created new extreme. Perfect trend line rule. You're bouncing at the bottom of the trend range. You're pausing all your shorts. You cannot be looking to sell. You have strong push above EMA, which is confirming the bullish momentum, and you have high low. But to predict market reversal, I would like to see reversal pattern failed second entry short. And by the time I get a failed second entry short, it is this far up from the EMA. You know, the high low looks great in hindsight, but when you're watching this live, it's closing quite far up. No failed second entry short. Feels a little bit too early. We have a break and new extreme. The market continues breaking lower, and we have a downtrend that has a break and new low. And you can see EMA is flattening, and we have a lot of price swings up and down, up and down. This is forming a consolidation. It's looking like a small trend range inside of the main one. So no clear bias, just sideways up and down, up and down. We're following mainly shortened channels. I'm going to redraw shorten uptrend. We can draw a little bit wider because right now we're bouncing off the low, so we can expect reversal. And we have a new low, first entry short, pullback, second entry short failure. There's a failed second entry short above EMA, downtrend played out, and we're bouncing off the lows of the main trend range and even of this temporary small consolidation. But the signal bar is 3.75, so this would have been 4-point big stop loss. You know, the bar is quite big. I can mark it, but I would recommend using a limit order so you decrease the risk, especially on a low volatility day like this. So you can see the limit order never really came far back down. So this is mainly for context. Unfortunately, it was a little bit too big. Now the uptrend created new extreme. I have uptrend break new high, but I can see price action keeps working hard. I was leaning more towards something like failed second entry short below EMA, but EMA rejected. We keep pushing higher, and this is quite confusing because which channel I'm going to draw? This one has a small break new high. If I'm going to use this channel, this is quite unorthodox channel to use because I'm completely ignoring the start of a bullish channel here. So I decided to go for something like this because from the very bottom we had quite significant uptrend, and you can see I have overshoot far away from the EMA, bullish depletion, and also I can combine the overshoot with the main key level resistance. This is why it's so important to always identify the key level resistance. So I expect right now stronger bearish pullback. Okay, notice I have lower high, confirmation of failed second entry long, new high, first entry long, second entry long failure, and lower high. Now, unfortunately, I'm a little bit afraid of this uptrend getting a retest, so I can't really take it. If I was playing the tighter one with the break new high, you know, more advanced trader can consider. But if you play this tighter one, what about this price session right here at the very beginning? So a little bit unclear, hard to put the finger on what is the correct channel to be sure. So I kind of prefer more confirmation. And we can see market completely reversed. So the sellers at the top of the trend range combined with the overshoot came into the market. This downtrend played out with the break and the new extreme. We're pushing above the EMA. I'm going to redraw the short and uptrend. Okay, I have a new high first entry long, new high first entry long. I expect new extreme to be formed, so I want to see second entry long. We get a second entry long here, but it is way too far up. I wanted to see second entry long somewhere around here, so I can buy at the bottom of this triple test. Then I would be interested. I cannot buy second entry long this far away from the EMA, this far up. Once again, I'll be buying directly into these highs. You can see the gap between the EMA. This is just way too far up. I cannot take it. Market barely created new extreme. I was still expecting something like push above EMA high low and to get legitimate new high for this uptrend. That never formed because bulls are already expecting push as a retest done. So nothing for me to do. I just need to adapt. You know, very confusing day overall. Just a lot of up and down, up and down. The channels are not so clear. One of those days where price session is definitely a little bit more challenging to navigate. You can see I can use the first leg to project where the second leg is going to be. You have a small break, new extreme. I'm going to redraw the short and downtrend. Okay, I'm going to redraw short and uptrend. Now I have a new low, first entry short pullback, second entry short. And this doesn't look that bad because the two-legged pullback down played out. This is a trend range, so I expect pivot. I have a first entry short pullback, second entry short. But notice how it formed. It's closing above EMA, so this is a good sign for bulls. But I have 1, 2, 3, 4, 5 bars stacked right next to each other. More importantly, EMA is exactly in one of these bars. I was on my break here, but you know, I can mark it. It's not such a bad time to take a chance. I can see why a trader would take it because it makes sense to expect bullish reversal. Two-legged pullback played out. Downtrend has new extreme. It's just the fact it is too congestive, especially since, you know, this is no strong trend day. This is very low volatility trend range all over the place. So you really have to make sure you're following the rules. If you took it, it would have ended up stopping you out before it continued working higher, unfortunately. I can see why you would have took it, but you can see the consolidation, the congestion, a little bit tricky. So you gotta be more patient. I'm gonna redraw short-term uptrend. Okay, we have a new high, first entry long. I'm expecting second entry long to get new high for this uptrend. Can I get a second entry long? I have a second entry long here, new high, first entry long, pullback, second entry long. But there's still a little gap between the EMA. You know, it looks very good. The momentum is strong. The signal bar is tier 1, but it's a little bit further away from the EMA. Once again, context-wise, great, but technically, locally, didn't form that well. So once again, a little bit more aggressive setup. Ended up creating the quick, easy scalp to new extreme. Uptrend played out. Okay, I'm going to redraw the downtrend. Can we get some lower high or for second entry long? We cannot. Market just reversed. You would expect some lower high here because this is a consolidation structure up and down. So once again, you expect market to pivot. New low, first entry short. Can we get a second entry short? Why? Because this downtrend needs to get new extreme and I follow the trend line rule. So two-legged pullback at the EMA, can we get it? We cannot. New extreme was made. Sell is played out. We can expect bullish reversal. And right now you can see the market is about to close. Yesterday was trading holiday, so no surprise that today was still quite slow. A lot of traders are taking the extended holiday. Not that much of a price session for us to analyze. Important thing is to always know what structure you're trading. This is clearly a trend range, and you can see how easy it is to identify the main key level. You expect market to pivot upon reaching these key levels. This is quite a healthy trend range. There is no imbalance. You can see move up, move down, move up, move down. So you expect tight channels. You expect instant pivots. Always expect the second entry to get a new extreme of the channel. And not that many setups today. I didn't take any setup because I just didn't see any good setup that would make me feel comfortable, and I would really have the context, key entry point, and the setup aligned, which I want to everything aligned, so make sure I'm not guessing. Good price action to analyze overall, but very few opportunities for us to enter. So one of those days, it is quite normal. On a day like this, it is important to practice your mental skills to make sure you don't feel the FOMO, you're following the rules, you're being patient, and you're not jumping the gun just because you want to trade. Just because you're a day trader, that doesn't mean that you have to trade every single day. If market is not giving you opportunities to enter following the rules and your plan, then you're simply just gonna sit on the sidelines and wait until a good opportunity occurs. So I hope you had a good trading day. I hope you didn't get trapped. I'm gonna wrap it up. I'm gonna talk to you next time. Good luck with your trading.